Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time today.
Good afternoon.
Well, stocks on Wall Street were up again on Monday. Earnings due in this week from some big names, but also data suggesting that the Fed may be succeeding in cooling down the economy, which would then mean less of a need for higher interest rates. Dow up more than 400 points. What's the story in the global markets?
Yes, on the regular trading day of Monday, Dow advanced by 1.34%, which is the highest level in its 6 weeks or so, while the S&P 500 and NASDAQ composite gained 1.2% and 0.9% respectively. Clearly, stocks have been building up Friday's gains after the Wall Street Journal report suggesting that Federal Reserve officials are concerned about the over-tightening. So therefore, the possibility of pivot might be happening. The interest rate hike, the speed of it may be slowing down in December after 75 basis point rise in November. Also, if you look at the earnings seasons, so far 20% plus of the earnings were released out of the S&P 500 companies, and 70 to 72% of those reported are better than expected in terms of the net profit and sales. We are looking into some of the big tech names to release the data on third quarter numbers for Apple, Microsoft, Alphabet, Amazon, and Meta platform, all reporting this week. So we're watching closely what's happening to the economic condition as well as the individual companies' perspective in the future. To looking at the Asian country, if you look at the Shanghai Composite, it has fallen significantly yesterday, and then today it is showing some decline further after the Xi Jinping tightened his grip on the country's decision-making bodies. The leadership reshuffled signaled a continuation of policy like zero-COVID strategy that might have weighting on the economy and global markets. And foreign investors were a major net seller of the Chinese market yesterday and today. Clearly, these are the uncertain time right now. Political uncertainty are overbearing the overall market condition, and the financial systems are actually reacting to that, including UK and various other countries, including US, in terms of the fast speed of the rate hike, as well as the government using fiscal policies to boost the economy.
Right. Well, Korean stocks were up today, too, at least until this afternoon when those gains disappeared. Again, buying on the KOSPI by foreign investors, and most of the big names higher, but rather large declines for LG Chem and POSCO. Tell us about the domestic market.
Yes, Korea also faces the earnings seasons. Yesterday, Hyundai Motor released the earnings, and also today, Kia Motors released the earnings. Volatility seems to be continuing to happen for individual company as well as the market. If you look at the foreign activities, foreign investors bought very slightly of 78 billion won of KOSPI, but they sold 92 billion won of KOSDAQ. And also futures market, they sold about 68.4 billion. Overall market volume is not that high, so therefore volatility is quite around for the market, and we expect that kind of trend could continue. If you look at the currency movement, also it seems that it did go up to as high as 1450 territories. Now it's down to 1436. The volatility seems to be continued to have a band anywhere between 1430 to 1445. So the direction-wise, it's very difficult to decide what's happening in terms of the market. Now, if you look at the consumer confidence index, the sentiment is also falling for Korea by 2.6 points to 88.8 in October, making 2.8% decline month on month. Clearly, uncertainty about the currency movement and also a very sharp rise of interest rate where Korea's government bond rate for 10 years has risen last week by more than 0.4 percentage point, which is much even bigger than U.S.'s rise in interest rate. So clearly, that is having a dent to overall market condition. Korea is much more sensitive to interest rate as well as currency movement because of its nature that return on equity is much lower and also the dependency on global economy is much higher.
Well, finally, Mr. Yu, oil prices are down for the first time in 4 trading days. Data showing lower demand from China, also with retail sales in the U.S. Flat for last month. What do you see happening with oil prices?
Yes, today the futures market, WTI futures is down by about 0.4%. Brent oil is also down by 0.3%, slightly at about $91 per barrel. The WTI is at $84 per barrel. It seems that the trend was that it did fall quite sharply to low 80s and then sharply risen in the last 2 weeks or so and then falling again in the last 1 week. So it's kind of in a box range period, anywhere between $80 to $90 per barrel kind of range. In terms of the oil demand, clearly we are seeing a weakening of that because people are concerned about the economic recession, and also China talking about continuation of doing zero COVID policies in the future, which causes the second greatest economy to continue to show very low-digit growth numbers. And if that's the case, the demand might be light-headed in the future. Also, if you look at the continuation of natural gas trend, we see that the warm weather in Europe is causing the overall supply to be too big, and that they're reserving the inventories, and that therefore we saw natural gas prices falling to pretty much non-existent negative territories. So clearly there's been huge bump in the prices before. Now it's correcting depending on the economic conditions. So far, the war between Ukraine and Russia has caused the supply side bottleneck, but now it seems that is gone. So clearly, what we need to look at is the economic demand for the oils. We think that, though, if the Federal Reserve decides to slow down in terms of interest rate hike, then U.S. economy might not fall into a deep recession, but rather a steady slowdown. If that's the case, we think that the dollar might be weakening, and that might cause the oil price to stabilize or even further rise. We think that in the future, oil price might be in a box range. Low end of the WTI might be at $75. Maybe high end might be $90. We think that the band trading is most likely depending on economic cycle.
All right, we'll keep an eye on it, Mr. Yu, with your help. Thank you as always for coming on the program. We appreciate your insights.
Thank you very much.